Thank you very much, ladies and gentlemen. It's always good to sometimes consume the story that we're trying to shape and the story that we're trying to build and integrate into our daily frames in different formats. And so a very big well done to the team for that. Ladies and gentlemen, we are going now to move in what we're calling our spotlight sessions. And essentially a spotlight session is thought leaders from different parts of the world, including of course here in South Africa, come and share some of their insights with us. In this particular spotlight, we've got two speakers who are asking the question, what role should central banks play in retail and wholesale payments, modernization and digitalization? I'm going to call them up, they're going to do a presentation each, and then on the back of that presentation, we'll then open up for Q&A so that you can engage both of them. So Lyle and Anneke, I'm going to ask you to come and join me on stage. Let's give them a big round of applause, ladies and gentlemen. And Anneke Kosse, and Anneke, you can actually go straight to the podium because you're going to speak first. And Lyle, you can take one of these seats. So Anneke Kosse is a senior economist in the Secretariat, which is part of the Committee on Payments and Market Infrastructures at BIS, or the Bank of International Settlements. And then Lyle Horsley, who's going to be taking the podium just after her, is the divisional head looking after the Fintech unit here at the South African Reserve Bank. So ladies, over to you. We'll hear both your presentations. And ladies and gentlemen, you don't have to wait until the presentations end. Get your finger on the button of your mic, and it will allow me to cue you so that we can bring your voices into the conversation as early as possible. But Anneke, over to you.
Thank you very much. Well, it's a great pleasure to be here. Thank you also to the Governor, Deputy Governor for the invitation. Thanks also to the staff of the SARP for this great event. It's really great to be here. Okay, so I think what we've heard this morning is already a couple of things. First, the world of payments is rapidly changing. Payments are digitalizing, but also that digital payments actually can help authorities to achieve some of their key policy objectives, public policy objectives, like reducing poverty, inclusive growth, financial inclusion. So I think with that, I think it is indeed a fair question to ask, like what is the role, or what should the role be of central banks in this whole journey of payments modernization and digitalization? So actually I'm glad to be here and to dive into that question. I must say though that I will not have a single simple answer to this question. And the reason is that jurisdictions are so unique. And what we've seen, and that's also what I'm going to do today, we've seen many approaches to this question. Central banks are taking different roles, or at least different approaches to these roles. So what I would like to do is actually give an overview of what we have been seeing to date globally. Just very quickly, I also must say that the usual disclaimer applies here. The views that I express here are mine and not necessarily those of the BIS or the CPMI. So what I would like to do in particular is let me see where oh, there you go, yeah. So I would like to take one step back first, and I would like to describe the key characteristics of payment markets, which actually have shaped the key roles, or the traditional roles that we've been seeing in payments. And then I would like to dive into three key trends, that of tokenization, faster payments, and then also the reduction of cash. And within those trends, I would like to dive into the question of what roles have central banks been playing in these three areas. So what are, let me see, I don't know where to point to. There's the magic side. There you go. What are the key characteristics of payment markets that actually explain why central banks have played an important role in payments? I think there's three. First of all, network effects. Payment system actually exhibit strong network effects in the sense that if the value of being part of the system, the value of using a payment method, it really increases also the value of others doing the same. So for me, for example, it really does not make sense to start using a payment method if I'm not sure that others are accepting it. Same for financial institutions or payment service providers. They would only like to join a system if they know that their counterparts are also part of that system. So you need to have this network. Second, economies of scale. So building a system, building this network is costly. It requires huge investment costs. And that also means that you need a lot of turnover to really make sure to bring the cost down and to make it sort of viable for users. So these two things together really require that you need to have a critical mass. You need to have a critical mass of users, of participants, and of transactions. And that is not easy. And because of that, it has, well, it's not easy to find providers and to provide entities that are willing to take that chance or really want to start building a payment system from the ground, to really get it off the ground. On top of that, and that's the third characteristic, payment systems, payments can be seen as public goods, and we talked about it this morning as well. So because of these three things together, it's really important to work together, to get stakeholders together, have the financial institutions together, and together build that system and get it off the ground. And that is not easy to get everyone together. And that is actually why we've seen a role for the public sector. Because without public intervention, there is this real risk that we end up with a collective action problem. We end up with this coordination failure of the provision of payment services. And even then, even if, at some point a payment system gets off the ground and it's privately operated, there's also risk of these negative externalities. There's this risk, and also Gita mentioned it this morning, there's this risk of a monopoly becoming so big, maybe misusing its power, charging high fees, limiting access. So these externalities have also been a key reason why this public sector has been intervening in payments, and especially then also the central bank. So what then are the general roles that central banks have been playing in general? Three roles: as an operator, so providing central bank money to the public, to the financial institutions as a settlement asset. The operator of payment systems and payments and settlement systems, and really again to make sure that that public good is provided, and to really make sure that people can pay safely and efficiently. And I think arguably this can be actually said that the operator role is one of the strongest roles that central banks can play in payment ecosystems. Secondly, we see the overseer role. Central banks have been addressing these negative externalities that I just talked about, have been addressing these externalities by overseeing payment systems, by, and in some cases also regulating payment system providers, and also playing a role as a supervisor. And thirdly, a catalyst. Central banks have been playing the catalyst role really to facilitate and coordinate private sector initiatives. So instead of doing everything on their own, of course, they want to sort of stimulate the market to take initiative as well. And arguably there you can say, okay, maybe this is the softest form of intervention, but still it has been proven worldwide to be very effective. Now, it's not that you need to choose between these. I think what we've seen, these are not mutually exclusive, and they actually work best in combination with each other. Now, let's dive into three key trends, and I want to start with tokenization. So, and what does that mean for central banks? So what do we mean with tokenization? Very shortly, it's basically a new way of representing money and other assets in a digital form on a programmable platform. Now, what does this mean for the role as central bank as the provider of a settlement asset and the infrastructures of payment systems? So again, let me take one step back first. So historically, economies have been based on the coexistence of central bank money and commercial bank money, the two-tier banking system. So central bank money is then issued by central banks as this settlement asset that is used by financial institutions and payment service providers for the interbank settlement in a large value payment system. And then at the second tier, it's the financial institutions that issue commercial bank money through loans and through deposit. Now, having the central bank systems, the settlement systems, and central bank money at the core, I think that's really crucial. It's crucial for the stability and the safety of payments, but also more broadly, the stability of money, the trust in money, and we also spoke about trust this morning. And why is that? The trust in commercial bank money, the confidence in commercial bank money really lies in the confidence that you, as an owner, can redeem it at any time, at par, or change it with other types of commercial bank money and with central bank money, and which is actually referred to as the singleness of money. And this singleness of money is actually rooted in the interbank settlement in central bank money. That's in the end what sort of is a foundation of this singleness of money. So that's why having central bank money as a settlement asset supported by a large value payment system is crucial, is really core to the financial system. Now, and that's also why we see that like today, I think 89, almost 100% of all the large value payment systems are RTGS systems, and 90% of these RTGS systems are owned by central banks and operated by central banks. Now back to tokenization. So what does tokenization now actually mean for the role of central bank as this provider of settlement assets and the operator of payment systems, large value payment systems? So the BIS and the CPMI, we've been working on a G20 report on tokenization in the context of money and assets. This report will be published later in this month. But I can say that one of the key insights from this work is that tokenization may change the structure of the market. It may change the structure of the market because tokenization or token arrangement, as we call them, they have the potential to combine multiple functions that sort of along the entire life cycle of an asset, they can combine it into sort of on one single platform, which means that functions that are currently performed by separate entities on separate ledgers, they all now take place on one ledger. Exchanges, for example, today, what they do, they're responsible for the issuance and the trading. CCPs are responsible for the clearing. CSDs are responsible for the custody and the asset part. And then we have payment systems responsible for the settlement, the money settlement. But with tokenization, there's the potential that all these functions are combined into one platform. So this has implications for central banks, of course, as they are today the provider of this money settlement and in the interbank settlement system. So that's why I think it will have questions that central banks need to think about. And I've listed here a couple of these considerations. First, what should the role be of central bank money in token arrangement? And what should the role be of, could the role be of commercial bank money or non-bank private money, like maybe stable coins? And what are the pros and the cons of each of these settlement assets in terms of safety of payment settlement, the efficiency of settlement? Also, central banks may want to think about if they want to decide to make central bank money available in token arrangement. Central banks need to think about the high-level design options. And there are a couple of options that central banks have if they want to make available their central bank money in token arrangements. For example, they could consider linking existing RTGS with the tokenization, with the platform through bridges, for example. But they could also decide to issue a wholesale CBDC, maybe on their own ledger, or maybe on privately operated or jointly operated ledger. So these are questions that central banks may want to think about. Another question related to tokenization is, well, often tokenization is assumed to settle transactions on a transaction-by-transaction basis. on a gross basis, which of course may have implications for liquidity. Again, a question for central banks to think about. Who would be the settlement asset provider in that case, or the liquidity provider in that case? And then finally, also as an overseer, tokenization, and especially what I said, this combination of functions into one entity or into one ledger might raise questions in terms of oversight. How would that require, or how would it change the organization of the oversight? Sorry, only questions, no answers at this point. But to that, I mean, what we've seen today already is that central banks have started intensifying their work on wholesale CBDC, especially in this context of making available like central bank money in a tokenized world. We see that, especially in emerging market developing economies, about 40% of central banks are now experimenting with wholesale CBDC. 20% are actually piloting a wholesale CBDC already. And what we've also seen in our annual survey is actually that central banks, while they are in the lead, of course, here, they are really working together with others. And I think that is key. Think about, again, the earlier, the first slides that I showed. It's really important to work together to get that scale, to get something off the ground and to get the buy-in. For example, here we see that a quarter of central banks are now also involving financial sector entities, but also working with academics and other public sector entities. So that was tokenization. Let's focus a little bit on retail payments, and especially faster payments. What are the roles, or could the roles be, of central banks in facilitating faster payments? So today we have like more than 70 fast payment systems have been launched in jurisdictions. Consumers and businesses actually in more than 100 jurisdictions are now able to make fast payments. And the uptake of fast payments is also rapidly growing across the globe. Now, interesting, really different approaches have been taken by central banks in terms of who is operating these fast payment systems. About 40% of the fast payment systems that we have today, they're operated by central banks. I think PIX in Brazil is an example of that, but there are more than that. 35, so about 1 in 3 fast payment systems are actually operated by the private sector. Sweden, for example, Swish is an example of that model. And then we have a quarter of these fast payment systems, they are actually operated by other entities. And with many of these other are sort of joint collaborations between the central bank and the private sector. I think Nigeria is an example of that one as well, where the fast payment system is operated by NIPS, which is collaboration central banks with the private sector. So again, I mean, there's no one clear answer to this question. Central banks have been taking different roles and different perspectives and approaches to that. So on top of thinking about, okay, who to operate a fast payment system, another important question for central banks is they might want to think about whether or not they want to change the RTGS that they run to facilitate fast payment systems. And actually, we just heard about it in our previous panel as well. We talked about access. But generally speaking, there's 3 scenarios or 3 ways in which of options that central banks have when thinking about this. Scenario 1, I put it here, I called it business as usual. So here, what it actually means is that central bank could just keep the RTGS as is, which then means that the settlement of fast payments in central bank money settlement would only be in central bank money during the existing opening hours of the RTGS. So at night or during the weekend, there will not be sort of real-time settlement then, but there will be other options, for example, through pre-funding. Another model that central banks could think about is to moderately update or upgrade their RTGS with functions to really support the settlement of fast payments beyond the RTGS opening hours. And different approaches have been taken. In Canada, for example, FPS Operator, they've actually have been allowed to have an RTGS account. So it's the operator who is actually acting as a settlement agent during the after hours. Or payment service providers, they have been granted the ability to back their outstanding positions in central bank money. That's a model that has been used, I think, in the UK and also in Europe. And then in the third scenario, central banks could really substantially upgrade the RTGS to facilitate a settlement of fast payment systems. For example, by just making it available 24 hours, or by introducing more frequent settlement cycles. Of course, I also must say that once central banks go for a scenario, this is not static. What we usually see is that central banks, the options actually are evolving over time. Well, other roles that central banks have been taking worldwide with respect to fast payments in terms of oversight, well, some central banks have a formal oversight authority over the fast payment system. In other cases, not necessarily. That really depends then on the size and the usage and the systemic importance of the fast payment systems. In other countries, and also we heard about that this morning, central banks could play a role in determining the access criteria to the fast payment system, mandating participation, which is what we see in Brazil. So the biggest banks are mandated to be part of the fast payment system. And then central banks could also maybe define rules or requirements, common standards, like QR standards, or messaging standards. And then as catalysts, central banks have also been playing a big role in facilitating faster payments. In some countries, they really have published strategic goals for fast payments. We saw that in the US, in Australia, for example, and really with the aim to stimulate the market to come up with market initiatives. And also another example is that central banks themselves, they play an example, they are part of the fast payment system themselves as a participant, or they're part of the board, being a board member. Then my third area, what I want to say or share a few considerations on is on the role of central banks in currently providing cash to the public, and what the current digitalization actually means to that. And we heard about it also this morning. So what we see is that indeed, like digitalization, payments are more and more digitalized, and this actually has gone hand in hand with the decline in cash usage. And this is reflected also in this graph. Here I've only depicted the value of cash withdrawals, but you see here that it is declining globally, and especially now lately very strongly in emerging markets and developing economies. At the same time, and we also heard that, cash is still used. It is declining, yes, but it's still the preferred method of payments for many parts of the population, for very good reasons. Think about the elderly population. Perhaps they lack the skills or they lack the confidence to migrate to the digital solution, but also maybe low-income people that prefer cash because it serves a way for them, it helps them to keep their budget or to monitor their budget. Financial inclusion, or maybe not having access to digital payment methods. These are all reasons why cash is still heavily used in society. On top of that, I think what we also see is that cash might help achieve jurisdictions also to achieve some of these public policy objectives like privacy, again, financial inclusion, resilience, just having a backup in case something happens to the electronic or digital infrastructure. So is the end of cash near? I don't think so, at least not in the short or medium term. So that also raises an important question to central banks. How to ensure that the cash distribution system remains effective, resilient and sustainable as the cash use is declining. In other words, how do we make sure that people who would like to use cash can still do it, while avoiding that it becomes too expensive at some point? So how to find that balance? Now, I think there's different things that central banks can do. Some countries have started to really look into the cash distribution system and looking for ways how to make it more efficient. For example, combining or merging different cash distribution systems of different institutions, so banks working together and sharing their infrastructure. Or the banknotes, can we make them more durable and have them last longer? But also as an overseer, there's some questions that central banks may consider in this context, like do you want to force or mandate cash acceptance by merchants, or do you want merchants to provide cashbacks? And some countries have done that. In other countries, we see legal requirements put in place to force sort of banks to continue providing services, withdrawal services, deposit services, or legal requirements regarding the availability of ATMs. That, you know, within a radius of so many kilometers of where people live, there should at least be one ATM. So these are all things that central banks could do within their role as an overseer or regulator. And then finally, also as a catalyst, central banks could, again, start publishing strategic objectives to really stimulate the market. And also maybe, promote initiatives like interoperability of ATMs, so that you as a cardholder, you can get your cash from any ATM, no matter if it's your bank's ATM or not. And that could actually bring down the cost of the cash supply. So in that context, what we've also seen is that central banks have actually been exploring retail CBDC, also with the objective of continuing to provide access to the public to commercial bank money. Also in emerging markets and developing economies. Here we see that about 25% of the countries are experimenting, piloting with retail CBDC. And again, also here, very good and very, I think, necessary. Central banks are closely working together with other stakeholders in the payments ecosystem, including end users. And I think that is really crucial. That's also what we learned from experience to date, that you really need to involve everyone to make sure that the product is meeting the demands. And again, that will only help to facilitate the uptake and to achieve that critical mass which is needed. So to conclude, I think one of the key tasks of central banks is to ensure that consumers and businesses can make and receive payments in an efficient way, safe way, smooth way. Now, the public nature of payment systems, the public nature of payments, and the importance of scale, it really warrants a role for central bank as operator, overseer, and the catalyst of change. Again, like I said in the beginning, each jurisdiction is unique. So while they each can play with these three roles, the way in which they fulfill this role really depends. It depends on the current market structure, the policy, public policy objective, the mandate of the central bank. So there's not really one size fits all approach of how to fulfill these roles. But I think one key thing that is equal and the same for everyone. Payments ecosystem consists of many players, and therefore we need a clear allocation of this public-private sector roles, and continuous stakeholder engagement is really, really key, both domestically and also internationally. So let me stop there for now.
Thank you very much. A big round of applause for Anneke, please. Thank you so much. And as I invite Anneke to take her seat and invite Lyle to go to the podium, again, I'm going to invite you to say, if you already have questions and comments that you know that you'd like to field to Anneke, you can press your microphone right now. We'll just get to you at the end, but it's helpful just for us to get a sense of where in the room the questions might be sitting, and in order to cue that conversation that is to follow. So with that, Lyle, we're going to hand over to you, and then when Lyle is done, then we'll take a seat and open up the conversation to all of us. Go for it.
Good afternoon, everyone, and thank you so much for that intro. It's really good to be here today. Anneke is a very tough act to follow on, right? because I read Anneke's papers for purposes of informing how I think about things. So we've tried to, hopefully we don't say the same things, or I'll say things from a South African perspective, but hopefully there's something new that I bring to the table. And also to say, Anneke's background is economics, so she speaks in graphs and numbers. My background is in law, so you'll see I speak in words, but hopefully I do take you through this quite quickly. So in thinking about the role of central banks in payments, modernization efforts around retail and wholesale payment systems, I thought that it would be useful to highlight first two sort of market developments that I think we as central banks do need to be thinking about. And then to go into some of the thoughts around what we are seeing around CBDC exploration, and then my thoughts around the role for central banks in modernization efforts. So the first kind of broad market development or theme that I want to touch on is this idea that money evolves, right? So what we use to make payments and to buy goods and services or to conduct trade with many centuries ago is not what we use today. And it won't be necessarily what we use tomorrow. So we need to be open to the idea that things change and the monetary and financial system then responds to their changing societal needs. And so from a South African perspective, we can see that historically we came from a bartering economy, and then we had foreign coins that were issued in South Africa, and then we had the first paper-based note, which was used as a currency only in the Cape Colony. And then you had commercial banks, which issued banknotes backed by gold. And then you had the establishment of the central bank and the Central Monetary Authority, which then was able to, or the exclusive authority was given to this entity to then issue notes and coins, and to do that in the national unit of account, which is the currency of the country, which is the South African rand. And what we see now is that there's again this emergence of private forms of money that are really sort of, I think, peaked with the introduction of kind of Bitcoin and stable coins. But really to say that these emergence of these private digital tokens, I think, are again forcing us to answer the question, what is money? Who should be permitted to issue money within an economy? And I think what's really interesting about these new forms of money or money-like instruments is the underlying technology on which they are issued. Because the underlying technology enables a peer-to-peer transfer of value from one person to another person. And the value proposition of these underlying technologies is really around decentralization and disintermediation, to do away with the central intermediary that you have in your traditional monetary system that's responsible for verifying your transactions or that you need to go through for purposes of making a payment from one person to another. And so I think in light of this, one of the questions that we do need to be mindful of as central banks is around, are these emerging forms of money or money-like instruments looking to solve a societal need that central bank or traditional money is not able to solve. And here we can think of things like the Web3 economy, crypto markets, decentralized finance, and so forth. And the second question then is, what is the role that public money should be playing in an increasingly digital ecosystem? And here again, as Anneke touched on, it's this idea of how do you ensure that you have a safe settlement asset as payment systems become increasingly digitized and the needs of society evolve, and how do you think about payment modernization efforts in the context of these developments? The second kind of trend that I want to touch on, or market development, is then around this digitalization of finance. And how these advances in Fintech continue to have the significant impact on the financial system. And so when we think about Fintech, we can think about it through these three lenses. The one is around, the digital transformation that financial firms are going through to adopt new technologies. The second one is around the players that are coming into the financial ecosystem looking to disrupt or partner with traditional financial entities. So we think about fintech firms or we think about innovators. And the third one then is around the digital technologies themselves. So what are those disruptive technologies which are changing the way traditional financial services are delivered and trying to enhance on how those products go to market. And so it is then about this impact that fintech is having within the financial ecosystem, looking to have better financial services for customers, more bespoke, tailored financial products, or expanding the scope of access to a wider range of consumers. And then what's the impact of that on both the central bank and incumbent financial institutions? And so this disruption that we see playing out in the market, we can then see enables innovation and it changes traditional markets, right? And so we see the emergence of new business models, we see new market entrants coming into the market, and we see new products and services. 15 years ago, we didn't call crypto assets a financial product. We now recognize crypto assets as a financial product in South Africa. And so this disruption can lead to changes in it can lead to structural changes in the financial system as well. There can be new forms of intermediation that takes place. New payment systems can develop, CBDCs, fast payment systems. You can have a new type of FMI, as Anneke touched on, this concept of a unified ledger that allows you to trade the asset, settle the asset, clear the asset all on one platform. It also then does create challenges for the regulatory environment within which these financial services and products need to operate. And so central banks are then forced to either change the regulatory framework, develop new regulatory frameworks, and then ultimately it leads to an expansion of what you supervise and what you then have to regulate as a central bank. All this to say that these things do raise critical policy considerations that central banks do need to be thinking about as we think about payments modernization efforts. The environment within which central banks are operating is not static. The world is moving and central banks are forced to take these moving considerations into account as they think about the role that they play in payments modernization. And so fintech has then also rapidly expanded the options available to make payments. And one of the applications of fintech is then around these digital payment methods. So currently in South Africa, a range of digital payment methods are available to consumers. Say for the CBDC, that's still work in progress, right? But retail fast payment systems have emerged then as an important innovation in the payments landscape. And importantly, it's also a tool for central banks to use to then bring about these public policy outcomes that they want to achieve. And so in line with this trend towards payment digitalization, we see that the volume of fast payment systems has grown rapidly in many jurisdictions, and we see that the conversation in some jurisdictions has moved to how do we interlink our fast payment systems so that we can then enable cross-border payments as well. And the largest markets, as many of you would know, around fast payment systems is in India, China, Thailand, and so forth. And the rapid increase in your fast payment systems then does lead to a decline in the use of cash. And so central banks as issuers of notes and coins do have to think about, as the digitalization efforts ramp up, what happens with physical notes and coins in a country, and how can you then think about a digital version of notes and coins or digital version of Rand that continues to support your monetary system and acts as that monetary anchor. And so we'll see then that a number of countries that have adopted fast payment systems are then also looking to a central bank digital currency as well. Does it stop the timer if it takes me 5 minutes to click the clicker?
Can we move
my
this?
time goes,
Oh, there we go.
okay. So I thought it would be useful to just touch on some points that was made in the context of Brazil, because I think Brazil is often used as an example, and I think it does illustrate this transformative potential of fast fast payment systems to achieve these public policy outcomes. And I thought that this speech that was delivered by Alexandra Tombini was quite instructive. So the points that he made were the rapid adoption of PICs can be attributed to a combination of strategic design decisions and external factors. These strategic design decisions include the mandatory participation by the large banks in PICs, the participation of non-banks in PICs, and a ban on exclusive deals between banks and non-financial firms. The additional factors include the pricing structure that prohibits transactions for P2P transfers within the PIC system, and a standardized user experience across different payment service providers. Since the launch of PICs, additional use cases have also scaled beyond the P2P payments use case. And for merchants in PICs, for merchants using PICs, it's much cheaper to use PICs than some other payment services. And so from a governance and oversight perspective of these payment systems, and as Anneke touched on, we do see that there are different models that emerge in terms of who owns and who operates the payment system. And so that's just goes through public and non-public entities that can own and operate these fast payment systems. Staying on the topic around governance and oversight of your fast payment system, the role of the public and private sector, as Anneke mentioned, it can vary. So some systems, it's completely publicly owned and operated, like in Mexico. In other systems, it's more of a hybrid or a collaborative effort between, it's publicly operated, but there are private sector entities that do participate in the rulemaking functions and so forth. And in some systems, you have a completely private model where it's owned and operated completely by the private sector. I think the point here is that no matter what the ownership and the governance looks like, a central bank would have an interest in overseeing the fast settlement system. And to oversee it in a way that it then does achieve these public policy outcomes that you are able to achieve through your payment system. And in the recent work that the BIS did earlier this year, and I think Anneke was an author in this paper as well, it does highlight that central banks, given the mandate that they have, given the legislative authority that they have, they are able to effect some changes that you want to see from a public policy perspective through the powers that they have to bring that to bear on a fast payment system. If we then just touch briefly on modernizing of wholesale payment systems. So there are efforts, of course, underway in the SARB to modernize the RTGS. So just to touch on, from a CBDC perspective, we see that the interest in CBDCs across central banks continues, but there has been a pivot towards a wholesale CBDC. And I think that pivot towards wholesale CBDC is because of the private initiatives within the financial sector that are looking at tokenizing of financial assets. And if you start tokenizing the financial asset and you're looking for efficiencies in the post-trade environment, you would then say, what is the settlement instrument that we need to use to settle those trades? And that's where we see that a wholesale CBDC then is gaining in prominence, and more central banks are now saying that within 6 years, they are more likely to issue a wholesale CBDC versus a retail CBDC. Of course, from a South African perspective, we've explored wholesale CBDC through Project Kosse 2 and through Project Kosse 2X as well, to look at what are the policy and regulatory implications that we would have to think about in issuing a wholesale CBDC. And across the world, we can also see that there is growing interest and ongoing experimentation and exploration around wholesale CBDC, both for security settlement, but also for cross-border payments, right? And so we see, if you, just to touch on a few of these, Project Embridge looks at a multi-CBDC platform for cross-border payments. Project Eura looks at the settlement of tokenized assets using a wholesale CBDC. Project Helvetia, again, looks at this idea of central bank money to settle tokenized financial assets. And then Project Dunbar, the project that South Africa participated in as well, looks at this a common multi-CBDC platform for purposes of seeing whether you can make cross-border payments cheaper, faster, and more efficient. And so the world is looking at these wholesale CBDC as payment instruments, and it's beyond some of the existing fast payment initiatives that many jurisdictions have already adopted. And so what role then for central banks when we think about these payment modernization efforts in the retail or in the wholesale space? The first one is that, and this is a point Anneke touched on as well, is that the role of central banks play different roles within the monetary and financial system. So they operate critical payment infrastructures, they oversee the payment system, they're also a participant within financial markets, they are a catalyst for change within the industry, and they're also a regulatory authority, right? So central banks play these different roles within the ecosystem. It is important for central banks to understand the impact of technology so that they can make more informed policy and regulatory decisions. So as I mentioned, as we're thinking about these payment innovations and developing new payment infrastructures, the world around us is rapidly changing. The technologies are changing, the participants in the ecosystem are changing, and the forms of value that people want to use to transact with one another is also changing. And central banks have an important role, given that they are the regulatory authority, to set these regulatory parameters within which activities can happen. And these regulatory parameters then do work towards achieving these public policy outcomes around access, around competition, around inclusion, around costs. And the regulatory framework does bring that certainty, predictability, addressing information asymmetries within financial markets. So it is a key component to how we think about payment systems. The next point is around digital payments that can enable these public policy outcomes. So we see that digital payments can be faster, cheaper, and more efficient. They can promote e-commerce activity as well. They can enable greater opportunities for saving and having access to different kinds of financial products. In one of the conversations earlier, there was a conversation around alternative data. So if you do have a digital footprint, and if you are digitally enabled to participate in a digital ecosystem, you then can produce different sources of data that can potentially be used to allow service providers to make more informed decisions about your ability to repay loans and your ability to be granted credit lines and so forth. And so this digitalization potentially does enable people to participate in broader financial products and services as well. It can also assist to move people from informal working arrangements into more formalized working arrangements, right? So you can have an informal sector becoming more formalized through a digital enablement. And of course, it can help with tax administration and collection of taxes, but also administration of grants in a more efficient way as well. And so fast payment systems can then become this catalyst that central banks can leverage to enable this broader payments, digital payments adoption within the ecosystem. And there are important roles then that central banks need to play around the design considerations, accessing that payment system and so forth. And so then just finally to say that the growing adoption of digital payments and the emergence of these private money-like instruments does have an impact then on cash. And central banks would then need to think about what is their role as the issuer of cash in an ecosystem, and how do they continue to support and provide this monetary anchor within a digital ecosystem. We see that central banks that have launched successful fast payment systems are also exploring CBDCs. The idea is that we shouldn't stand still. The environment is not static. Things would change, and we need to be open to building and enhancing on even your fast payment system, and to see how these innovations can potentially enhance or complement a fast payment system. And are there some additional use cases that can potentially be enabled through something like a CBDC? And yet it is around tokenization of financial assets, using smart contracts, and this concept, I think, in Singapore, around purpose-bound money. So are there these innovations that we can look towards to complement and enhance some of the existing modernization efforts? Central banks do need to think about how they future-proof their monetary system. And so again, we can't stand still. We need to be looking at the technology. We need to be thinking about the disruptions that are coming in so that we can build things that are appropriate and future-proof as well. Ultimately, central banks don't build payment systems for themselves. They build payment systems for the ecosystem. We need to think about participants. You need to think about consumers. And so the collaboration between the public sector and the private sector does become absolutely critical. I'll stop there. Thank you very much.
Thank you very much. A big round of applause for Lyle. Lyle, you can come and join us and take a seat, and we're going to open up the conversation. I'm going to start at table 83, which is that way right at the back, and I'm going to invite, we've got a few minutes to maybe take another 2 questions. So if you, and I do see that there's another light on at the back of the room that way. I'll get your table number in a second. But table 83 at the back, if you could please introduce yourself and ask your question.
Thank you. It's Ingrid Goodsby, PASA. I have a question about the central bank's role as overseer and operator. In the event of, for example, a conflict of interest, failure to deliver, who is going to protect the consumer and the participants? Thank you.
Ingrid, fantastic question. So we'll note that. Can central banks be both overseers and operators? What if there's a conflict of interest? Who then is going to protect the consumer? Can we be player and referee? And then I'm going to make my jump to table 38, which I believe is the table towards the back of the room. So please go ahead, sir. I can see you.
Good day, I'm Turi van der Spy from Lockbox Africa. I've just got a question with regards to the 150-odd FSB licenses issued by the FSCA for crypto asset service providers who are using everything from tokenized deposits at banks to tokenized money market funds with asset managers, as well as native cryptos and ZAR stablecoins to effect payments in the system today. How does that fit into the modernization plan?
Question around the FSP licenses to certain players that are already using crypto. How does that fit into the broader plan? I'm not seeing another table on my radar, so I'm doing a final scan and not seeing a table, so I'm going to turn back and we're going to address these 2 questions and then begin to wrap. So maybe let's start off with Ingrid's question. I'm happy for both of you to take a go at it. Can central banks be both player and referee, and who looks after the interests of the consumer then? Maybe to you, Anneke, first.
Yes. Well, actually, I think this is a very good question, and it's been a question that central banks have been sort of an issue that central banks have been facing already for years. Think about the RTGS. So in that case, we already see that central banks are the operator of the RTGS, and at the same time also the overseer of the RTGS. Approaches taken so far, what we see is that in those cases, central banks have really clear, separate responsibilities. I mean, they're divided among different departments, and usually, actually, the separation goes really up to the highest level, to the level of the governor. Yeah. So it really to make sure that these are separate tasks, responsibilities, and I think so far that has played out pretty good. And I think similar models could be used also for other type of systems than like fast payment systems, for example. Yeah.
So Lyle, would you agree with that if there's a distinction in the organizational architecture, that it is enough to ensure that there isn't a blind spot in terms of who protects the consumer?
Hi.
So I think this microphone is probably, oh, you're not wearing one of those. Okay, go for it.
Is this what?
Yeah.
Oh, there we go. Okay. So I think Anneke is spot on. I think that's absolutely correct. And I think we do have these international principles and standards that as central banks we do need to adhere to in thinking about best practices around governance, particularly around operating critical payment infrastructures, and how do we assess ourselves against those as well. So I think that there are sort of guardrails in place to mitigate against bad outcomes to consumers and to potentially conflicts of interest within central banks in how they manage operating and participating and overseeing payment infrastructures. Yeah.
So it's interesting that you both use similar language. Lyle, you talk about guardrails, and Anneke, you talk about that separation. And I think you both spoke about, to some extent, design imperatives. Can we design it in how central banks think about, their role as an overseer versus their role as an operator, so that that guardrail that you're talking about, Lyle, is firmly in place and isn't at risk of being undermined or forgotten? And Lyle, maybe you can, since you brought up guardrails, you can go for it.
No, I think you can definitely design it to put those things in place. And so you'd have separate teams that run the operations, separate teams that look after oversight and the regulatory environment. And so that's how we've structured it within the South African Reserve Bank. You can, as you said, you can have separate lines where you report into. I think those are all considerations that you can take into place. So definitely you could design it in a way, I think, that maintains those guardrails, make sure that they remain in place. And as I think, developments emerge and best practice emerges and changes, those are also things that you can take into consideration in how you think about future-proofing yourself as the central bank.
So I'd love to bring Toby's question to you, Lyle, but I also would love to double-click on the example you gave, Anneke, around Nigeria and an operating model coming out of Nigeria. Just to double-click on that for us a little bit, when we were talking about, I think you were talking about a range of emerging models in terms of central banks playing a role in fast payment systems. It would be interesting to know what our brothers up in the West, our brothers and sisters are doing in the West. So a quick comment from you, Lyle, first around Toby says there are licenses that have been already granted to certain players. There's lots of activity in the system. How does that actually fit into the modernization plan?
Thanks. That's a very tough question. So I'll give my view, right, which may not be the SARB's view, or the view of the FSCA, because I see the commissioner has now left the building. I was going to pass it to the commissioner. But I think with crypto assets, I would say that the approach to regulate crypto assets is being done in a phased approach. And excuse the pun, the first phase is that they are regulated and licensed under the phase framework. But there are a range of activities that crypto service providers would perform for which they are currently not licensed, or for which that license is not intended to capture those activities as well. And so we'll find that if you are a crypto service provider, you may be issuing a stable coin, but there's no framework in South Africa currently for stable coin issuances. You may find that you may be performing some payment services with crypto assets, but the regulators are still considering the approach around payments, regulating crypto asset service providers from a payments perspective. And so the point is that the environment, the regulatory response is evolving, and I think we'll find that some of the activities that the market is already performing would become regulated activities under different regulatory authorities at different stages as the framework develops and as it matures. And so I think from a payments modernization perspective, as the central bank thinks about new emerging payment instruments or payment services and payment service providers, one of the questions would be around how do you view crypto assets? Are those a form of payments that you want to recognize and regulate within the ecosystem? So I think those are still things that we are having to consider.
Thank you very much. Thanks for taking on the difficult question, and potentially it could be a conversation that continues over lunch. Anneke, final comment before we take a break and go to lunch. But I thought it was quite interesting that you made mention of Nigeria as an interesting market where there are emerging models around the role of central banks in in fast payment systems. Can you just double click and tell us a little bit more about that?
Yeah, sure. So as far as I am correct, at least, so Nigeria, they have introduced a fast payment system, the NIPS instant payment. And it's basically, they created a separate organization it's the organization NIPS, the Nigeria Interbank Settlement System. They are actually operating the fast payment system. And it's that organization which is basically a collaboration between the central bank is part of that, and the private sector, so the big banks, coalition of banks. So together they've formed that organization, and they're operating the instant payment system.
And I think that's interesting because the both of you spoke about the emphasis on really clearly thought out participation in both public and private players. And herein is an African example of both a public and private collaboration. Ladies and gentlemen, might you please give Anneke and Lyle a big, big round of applause. Thank you so much.